Bitcoin prices now more than double where they began the year. And our next guest says we're just in the early innings of a new crypto bull market. Let's welcome a very special friend, Brian Kelly.
Yes.
It's great to be here. Great to be back.
What's new, BK? I mean,
what's new? What's new? Yeah, I mean,
the audience. But you've been operating your Bitcoin fund still.
Yeah,
correct?
Yep. Still involved in Bitcoin every day, 24 hours a day, 7 days a week, never stops. But it's been an interesting year. You know, I mean, in the last year, we've gone from everything from FTX to now all of a sudden Argentina potentially, they've elected a pro-Bitcoin president. So the momentum and sentiment has changed dramatically in that market.
And then not to mention all the potential Bitcoin ETF filings that are still in the wings here.
Right.
So where do you see, you don't have a price target necessarily on Bitcoin.
Yeah.
But what are you thinking in terms of where you are now?
So there's a couple things. We know in the past that Bitcoin has had these 2-year cycles that are generally centered around the halvening. And so we have another halvening coming up in April. And I'm not one of those people that thinks the halvening is the actual catalyst, but it's one of those sentiment things that all of a sudden now you have a reduction in supply. Couple that with the fact that we have the Federal Reserve that is likely done for some time being of raising rates. If not, we don't think they're going to go to 10%. Maybe they go to 5.5%, right? And then the second part of that is we now have these ETF filings. So for the first time ever, just like the gold ETF, you're going to have retail investors, not that they couldn't buy it before, but now registered investment advisors. Your Morgan Stanley wealth manager can allocate to this. And so that's what's got the market excited about this new ETF.
All right, Beeks, you just named a bunch of catalysts for the Bitcoin to keep going higher. What do you think the core is? Is it just digital gold, versus like we often hear lots of folks come on and just say they should be allocated to that. We've had the dollar come in, and obviously Bitcoin has been trading pretty well with that. What's the core thesis right now? If you've missed out this run over the last year, and sentiment was really bad a year ago at this time, and now it's up, 200% or so. Why should people be allocating low single digits percentage of their investable capital to Bitcoin right now?
So I think the easiest way to think about it is digital gold. If you have a portfolio and you've got some of it that you want allocated to gold, and let's call that for inflation reasons, you're worried about the dollar or whatever your currency is going lower, you want to have some kind of hedge against that. So you could do gold or you can do Bitcoin. And I would argue that Bitcoin is a better use case than gold because I can't use gold on the internet. I can use Bitcoin on the internet. So simply look at it. Bitcoin's a $700 billion market cap right now. All the gold that's ever mined is worth somewhere around 7-8 trillion. So if Bitcoin can take some market share from gold, which I think it's doing, then the multiple return from there, why couldn't it be 5x from here? Why couldn't it be 10x from here? Those are crazy big numbers, but if it starts to make market share just like any other kind of business would out there, that is what starts driving up the market cap.
If inflation reaccelerates, does that throw a monkey wrench into the Bitcoin story?
I don't think so. It depends on how, if inflation expectations reaccelerate. So what we saw, everybody says, is, hey, BK, Bitcoin wasn't a great hedge against inflation. And my response to that is, well, you only bought Bitcoin when you needed it. As soon as the Fed said, hey, we're on it and we're going to raise interest rates, I don't need an inflation hedge anymore. So if you start to see inflation picking up, and then I would expect Bitcoin to pick up as your hedge, just like I would expect gold. And then we've got this period of time where the Fed's behind the curve and all that, and that's your bull market.
So let me ask you, I'm playing devil's advocate because I am long Bitcoin. That's what I do also. So the use case part of Bitcoin never really came to be. And do you dismiss that it won't ever come to be?
No.
I mean, people don't use it to pay for, the idea that, people that it would be on companies' balance sheets, for example, and people would use it to pay for all kinds of things. That hasn't happened.
That's because people want to spend their filthy fiat and they keep their good money. But the truth is that it hasn't happened yet because it hasn't had that adoption yet. We're still early in this, but that's why I think Argentina is kind of really interesting. Earlier, we saw El Salvador switch to kind of a Bitcoin standard, if you will. If Argentina picks that up, they're a bellwether in South America. They could be that bellwether for the global South. And that really could pick it up. That's what we need, and I would agree with you. It would be great if we could have that. The rally's been going just on an investment thesis, but if we actually used it in countries like Argentina, I think that would really help.
Is there proof that the reason why people are not more allocated to Bitcoin is that there is no Bitcoin ETF, when there are other There are Bitcoin futures, there's Bitcoin future, ETFs, ETNs, I should say, ETPs built on futures, other products basically. How do we know that there's going to be incremental money going into Bitcoin because of Bitcoin ETF as opposed to money being reallocated within Bitcoin? Yeah,
so it's a great question. Most of the products that are out there now are difficult for a registered investment advisor to buy or aren't approved by compliance, where an ETF is a more traditional product. If that, I think, will help.